start our webinar with an opening remarks. So today's webinar is organized by Financial Regulatory Commission of Mongolia and CMF jointly. And for those of you who are participating and joining us for the first time, CMF webinar is a series of webinars dedicated to provide market participants, companies, investors, and professionals with the market intelligence on various topics. And on today's webinar, we will be exploring on opportunities for fundraising available on London Stock Exchange. And to open this event, I invite the Chairman of Financial Regulatory Commission of Mongolia, Mr. Barisahan Dembeldash.
Hello, can you hear me?
Yes, we can hear you.
Okay. So first of all, I would like to extend my warm greetings to all esteemed market participants who have joined us today's webinar. I would like also express sincere appreciation to the London Stock Exchange and the capital market Mongolia for their support in organizing this webinar. Today's webinar aims to provide comprehensive understanding into the opportunities available on the London Stock Exchange. We will explore several topics such as opportunities, criteria, requirements, stages, and other fundraising tools for listing and trading shares in both primary and secondary markets. In the recent years, amid global economic and geopolitical tensions, we are facing a period of uncertainty affecting trade and financial markets. However, Mongolia, with its economy primarily reliant on the mining industry, stands resilient, sustained by stable macroeconomic conditions. This improvement can be attributed to the rising price of its key export commodities in the global market, leading to increased exports income. For instance, in the first quarter of 2024, Mongolia's GDP reached 16.5 trillion MNT, marking an almost 20% increase compared to the same period of the last year. At the same time, the total revenue of the government budget for the same period amounted to 7.7 trillion MNT, an increase of 2.6 trillion MNT or 51.3% increase from the same period of the previous year. In terms of monetary policy, as a result of implementation of strict monetary policy in the measures taken to limit the inflation growth by the central bank, the inflation has decreased to 7%, and it's been kept at a relatively stable level recently. Mongolia's capital market has also expanded rapidly in the recent years, marked by substantial increase in the new types of financial products and services. There has been significant growth in security trading activity in the number of professional investors. And I am pleased to say that these changes, accompanied by legal framework that aligns with the international standards, contribute to the emergence of favorable market environment for foreign investors. For instance, we have witnessed the introduction of its first dual currency bond, pioneering digital bonds utilizing fintech, the first green bond, and the first domestically credit rating bond. Additionally, the market has seen the launch of first open-end and closed-end mutual funds, as well as exchange-traded funds. Furthermore, asset-backed securities have been introduced, complemented by IPOs of systematically important banks under the recent banking reform of Mongolia. And the regulatory landscape has also adapted to include the mining products commodity exchange associated brokerage regulations as well. In addition, the recent amendments to the law on securities market are expected to establish a solid legal framework, introducing new products, services, and technologies from the international capital market into Mongolia. This initiative aims to simplify the process for companies to secure long-term financing through the capital market, potentially increasing investments. Moreover, these changes aim to enhance the attractiveness of Mongolia's capital market to both domestic and foreign investors, thereby stimulating cash inflows and fostering capital market growth. As a result of these measures, the capital market value peaked to 11.8 trillion MNT by the first quarter of 2024, equivalent to 17.13% of the GDP of Mongolia. This represents remarkable 1.8-fold increase compared to the same period of the year in 2023. Looking ahead, our top priorities include integrating Mongolia's capital market with the global market, providing policy support for domestic enterprises to access international financing, and improving taxation and regulatory frameworks to attract both domestic and foreign investors. Towards achieving these goals, we are actively pursuing initiatives such as supporting public companies to cross-list and issue depository receipts on both Mongolian and foreign exchanges, encouraging the English disclosures for listed companies, and improving investor relations. The Financial Regulatory Commission remains committed to fostering a dynamic and investor-friendly environment through progressive policy measures and reforms. We are confident that closer collaboration between Mongolia and international markets will yield mutual benefits and push our capital markets to new heights. Indeed, with that, I wish you all success in today's webinar, and thank you all for listening to me. Thank you once again.
Thank you, Mr. Barislaha. And now I invite Ms. Ayuna Nechaeva, Head of Europe and Primary Markets, London Stock Exchange, to present your presentation to the attendees. If you have any questions related to the presentation, please leave your questions on the Q&A session to ask the question further. So now let's hear the presentation.
Hi, everyone. Thank you very much for having me. Thank you to CMM and Barsayhan and Mr. Namhaidosh for the presentation as well. So my name is Ayuna Nechaeva. I'm Head of Europe Primary Markets of the London Stock Exchange. The London Stock Exchange is part of the bigger London Stock Exchange group, and I'll tell you a little bit more about it in a minute. I know that there are also lots of capital markets professionals on the call, so I will aim to speak a bit more broadly, not just about listings and IPOs, but actually the markets themselves. So let me screen share my presentation. Right. Okay. Can everyone see that? Can the moderator confirm that you can see it?
I cannot see it.
Not yet. Okay.
Not yet.
Right, let me try again. Share. Okay, I think now you should be able to see it.
Yeah,
Yes.
I can see it.
Yeah.
Okay, brilliant. Okay, so just to begin with the London Stock Exchange Group today. As you know, the London Stock Exchange Group is a diversified market infrastructure. And the reason you might know that is because we also had a long-term strategic partnership agreement with the Mongolian Stock Exchange, and we helped build and develop it from 2011 until a few years ago. And one of the things that we utilize is the London Stock Exchange Group technology to really drive the local markets. So we operate across capital formation. You can see the column on the left, capital formation, where it's all the capital markets, funding, equity, debt, so Eurobonds, IPOs, and so on. Then we also have technology. We also have indexes, big data analytics business, including FTSE Russell. But the most recent actually addition to that, which some of you may not have actually heard about, is our 23 billion merger with Refinitiv, which is a data analytics provider. Its biggest competitor is Bloomberg around the world. We completed the merger in 2021 and have fully integrated the business. So today, the London Stock Exchange Group is around 50 billion market cap, and we are listed on the London Stock Exchange. So on the capital market side, you can see the equities and fixed income investment companies. So on the capital market side, it's not just the listed companies, it's not just bonds, it's also investment companies. So we've got investment fund, which are listed and traded on our market. And the total value, you can see it's a pretty big market. So 6.5 trillion total market value of all companies listed on the London Stock Exchange. We have over 20,000 listed debt instruments, which raised over 5.9 trillion. And then obviously 374 listed funds. So this is just to give you a background. The most important thing, I think, over the last few years has been the strengths and the positioning of London as a financial center. And I have received, as head of Europe, as you can imagine, since 2016, I have been receiving the question, what happens to London, after Brexit, as UK exits the single European space. Well, the good news is that despite all the turbulence and the sort of so-called hard Brexit that actually happened, London's financial center retained its leading position in Europe. So we are the largest exchange in Europe and fifth largest in the world. So you can see in terms of Europe, we're far ahead any other European exchange. So, people were saying, Frankfurt Stock Exchange will be big or Paris Stock Exchange will be big, but actually they're nowhere near the size of London. So far this year, $23.4 billion has been raised through the London Stock Exchange by companies via IPOs and follow-on offerings. And that's more than 3 times more than the next largest European exchange, which is Deutsche Börse or Frankfurt. So in terms of positioning in the world, we are competing obviously with all the big international centers. So we're just behind the big US exchanges, but also the Indian exchanges, where by capital raised in India, there is a requirement to list domestically for all companies. Okay, so some of the biggest transactions that have happened, just for your understanding, National Grid, which is the electricity grid of the UK, it completed a record follow-on offering. So they raised in one single transaction $9 billion US dollars, which was last month. Haleon, which is a pharmaceuticals company, also did a $3 billion follow-on. London Stock Exchange Group itself did a big transaction. But in terms of IPOs, I'm very proud to say that Kazakh airline, Air Astana, listed on the London Stock Exchange, and they raised over $350 million on our markets. And what's really, really important is that it was a privatization. So it was a sell down by the sovereign wealth fund, Samruk Kazina, and their other shareholder who sold down was the BAE Systems, which is a British defense holding. Right, so One of the interesting things that we also get asked is, of course, and we talk to a lot of fintech companies, technology companies, financial sort of banks, and so on and so forth. And one of the questions we get asked is, how are we different from, for example, Nasdaq or NYSE? So what we find is that American markets are very strong, of course, and really supportive of certain sectors, but they tend to be primarily domestically driven. So 81% of investors on the American exchanges are North American. So they tend to support American companies more than international companies. And that really shows in terms of performance. We have seen the data is non-US companies actually tend to perform much worse than non-UK companies in London. So London Stock Exchange London's financial center is really, really diverse in terms of geographic breakdown of its investor base. So only 39% are UK investors, and actually nearly the same, or just over 39%, so 40% are North American investors. And 14% are from Europe, and then also 7% from Middle East and Asia. What it means is that non-British companies can get a lot of support and a lot of following when they list on the London Stock Exchange, and that's why the international franchise and, for example, European companies and Central Asian companies, which I cover, tend to get really good support here. So, yeah, my title is Head of Europe, but actually, because I've historically also covered Russia, CIS, and Mongolia, so these are the regions that are under my team as well. So Russia obviously market closed in 2022 for obvious reasons, but since then the Central Asian market has really grown. So we're seeing a number of really important deals that have already come to the market, but also are in the pipeline from Central Asia. So it's Kazakhstan, Uzbekistan, Kyrgyzstan, and so on. And of course, Kazakhstan is probably one of the most developed markets compared to others in Central Asia. So obviously Mongolia remains hugely important. Technically it sits somewhere apart because you are very dynamic, democratic country with its own mining resources, with a lot of really great banks, lots of technology innovation that I'm seeing. I have been speaking with a number of Mongolian companies recently. So Mongolia is obviously the country to watch in terms of interesting ideas coming out of interesting deals and ideas coming out of the country, and not just in the mining sector. So it used to be where we spoke about Mongolia, we used to speak about sort of copper and coal, but I think these days there is much more focus on innovation and fintech, and also sustainability. And as the previous speaker mentioned, the recent green bond, inaugural green bond listing is really, really important, and kind of puts Mongolia on the international stage in terms of sustainability. So today there are 590 billion sterling was raised so far to date by European companies. Sorry, it's the total market cap of all European companies in London. There are 155 of those. Out of those, we've got 23 companies from the CIS. So that's Georgia, Kazakhstan, Azerbaijan, and so on. And these businesses are valued at 34 billion. But I think what's really important is the median market cap of those companies. So so we speak to a number of mid-sized companies or small companies, and they say, actually, is London too large for us? Are we not better off to list somewhere like on a small exchange? And the answer is actually, in London, we welcome both small and medium-sized and large companies. And the median market cap of European companies, for example, on our market is 244 million, which is not sort of the, kind of billions and billions. It's actually 240 million. but I'll talk a little bit more about the private markets that we have launched, and those are for startups and sort of early stage companies as well. One of the most important deals of this year has been the IPO of Raspberry Pi. So Raspberry Pi is a technology company. It provides high quality, low cost computing solutions for homes. And it basically is an alternative, a sustainable alternative for the likes of Microsoft and Dell and all of that. So the important bit, and you can see the photo, this was the celebration. We had pink confetti because pink is the sort of the corporate color of Raspberry Pi. So they raised just over 170 million sterling. But what's important is that the price jumped by over 40% in the first day of trading. I was there on the balcony, and I saw the price just increasing. You know, on the screen. It was really fantastic to see. It's also founder-led. So this business was founded by husband and wife a few years ago. And this IPO was a partial exit by them, but also, as you can see, they raised 19.6% of the capital raise was actually primary capital. So this capital, which was new money, which was reinvested in the business. And for us, it's also very important that we're not just, you know, the IPO is not just an exit by shareholders, but also it's an opportunity to raise new capital to reinvest in the business. Eurostan I'd like to mention because it's a unique transaction in the way that it was a triple listing. So it was a cross-border triple listing. They listed on the Kazakhstan Stock Exchange, KASE. They also listed on their relatively new AIX, which is Astana International Exchange, and also listed on the London Stock Exchange. And as you can see on the right-hand column, in terms of where the investors came from, 58% investors came from Kazakhstan, 33% from the UK, and 4% from the US. Why is it important? It's important because these days we no longer talk about just a London listing where basically a company leaves and becomes a fully British company and has only UK or Western investors. This actually a very important really important opportunity for the domestic investors to support the listing. So domestic retail, domestic institutional investors supported that listing, and that really sorry. And that really is quite crucial. And in terms of investor type, they had long-only investors. So these are institutional investors that buy and hold for over 5 years. They had 50% hedge funds, which tend to trade and drive liquidity, and then had 31% of those were retail. And those retail investors were primarily Kazakh retail investors. Just a minute. Actually, I think the light went off in my room, so in the meeting room. So I'm just going to pause here and switch on the light. Just a minute. Sorry. Okay, I am back. Let me know if there are any problems with connectivity. Just feel free to flag if you can't hear me. Okay, and the other one, the other case study is Kazatomprom, and I also talk about, and I know this webinar is about how to list, so I'm going to talk about the process and the requirements. But before moving on to that, I just wanted to flag the Kazatomprom case study, which is also a national company from Kazakhstan. It's the largest uranium producer in the world. And again, this was a privatization. But the most important thing is that for this company was that not only did they very successful IPO for 150 million US dollars, but they also subsequently did 4 follow-on offerings after that. So it's not just the capital that's raised at IPO, it's the ability to return to the market, to the liquid market, and raise capital continuously. Right. Technology. So I wanted to focus on technology sector or tech-enabled sector today because I think there is a massive opportunity as well in Mongolia, and lots of innovative businesses there. So I wanted to talk a little bit about that. So in terms of tech listings, actually London leads in Europe, but actually globally as well for small and medium-sized tech listings. So some of the bigger ones, in America, obviously you have, NVIDIA, which is in hundreds of trillions now. You've got, we call them Magnificent Seven. So Apple, Meta, Google, and so on. So, or Alphabet, it's called. So if you remove those, actually the performance of tech stocks is actually comparable to the performance elsewhere. And in London, London listed tech stocks actually are often just as good or actually trading better than in the US if we remove sort of the big massive tech stocks. So in London, we typically have the size of tech companies anywhere between 50 million to 10 billion, with the 10 billion being the upper sort of upper limit, sort of upper end of the range. So 55 tech and consumer internet IPOs since 2020, over 10 billion raised. One of those was Kaspi, again from Kazakhstan, was a massive fintech company. But also, if you look at the market cap at IPO, so the median market cap for tech IPOs was 126 million. And they raised on average 46 million. So it's really quite interesting how things are really different in the tech sector, and sort of increasingly small and medium-sized companies, international and UK, find that capital in London. So I've mentioned a little bit about, I spoke a little bit about the size. So does size matter? So if you look at the left-hand column, top 10 London listed tech companies. So a company of 10 billion size will be number 2 technology company by size in London, but the same size would be number 100 within Nasdaq 100. It will be basically right at the bottom, and then on NYSE it will be sort of number 450. So it kind of gives you an idea of how it's how the two markets compare in terms of the ability to support companies below 10 billion size. Fintech, I think, is hugely important. Fintech is one area that's been developing in Mongolia quite actively. So it's not just traditional banks. It's not just banks who have rolled out the online banking and started calling themselves fintech. It's more about innovative solutions. It's more about payment solutions. It's about traditional banks also innovating in other areas to provide other services, not just those that are banking related. And that was very much the journey that Kaspi, used to be Kaspi Bank, undertook. And as you know, they have a super app, and you can do basically anything you need through that app. You can buy a car, you can have documents notarized. You can, obviously you don't need anything else. You just when you leave house, you just have your phone and you have an app on that, and you can pay anyone in seconds or immediately, basically from your phone, and do whatever you need. So in London, the financial sector has traditionally been one of the largest, if not the largest. So companies, 170 companies, financial services companies, 1 trillion combined market cap. Obviously, some of them are traditional, insurance funds, big banks, and so on. But if you look at the bottom graph, there are increasingly a number of companies that are tiny. So we've got 10 companies that are, from up to 5 million market cap. We've got about 20 companies that are up to 50 million market cap, and so on and so forth. So it's really important to see this trend where you're increasingly seeing the disruptors, the smaller startups that are challenging the big firms. Especially, for example, I can tell you that the 2 recent listings from my region, from Europe, one was Italian business RegTech. In RegTech, so it's regulatory technology. So it helps banks basically meeting their compliance needs. So and the other one was a fintech, which did like a small loans for businesses. Again, a really interesting business. The success, and that will be actually interesting to some of the professionals on the call today. As you know, the success is not just around a successful IPO. So you can do the deal, and that's great. Investment banks, lawyers, auditors, they do the deal, collect their fees and so on and so forth. But typically, what the success of the deal is also determined by its performance in the aftermarket, including by liquidity. So as the venue operator, the London Stock Exchange, we obviously, for us, the IPO is not the end, it's the beginning, and it is the beginning of our relationship with our issuers. And one of the things that we really are really focused on is this aftermarket liquidity. And what really helps, what really helps to drive that investor engagement and liquidity is the analyst coverage. So in London, there are 30 analysts covering fintechs, for example, and also that's very similar across the technology sector. And they don't necessarily just cover London listed stocks, they cover other European stocks and so on. But it's really, really important to have those analysts because investors do rely on their reports to make their investment decisions. One of the European, I've showed you some of the Central Asian case studies and British case studies, but I think one of the most successful European case study is a company called Wise, and it will be familiar to many of you. It's formerly known as TransferWise, so they do payments, and they were a unicorn startup founded by 2 chaps from Estonia, and then they were supported by massive private equity and VC firms, and they did this listing on the London Stock Exchange. It wasn't technically an IPO because they didn't raise any capital, and the reason they didn't raise any capital is because they didn't need any. So they did what was called so-called direct listing. So direct listing is when you list on the exchange without raising any capital, and you use the special technology to enable the market to find the price. So because there is no IPO marketing and so on, so how do you establish the price? And what we did is there was a guidance price set by the banks. As you can see, Goldman Sachs, Morgan Stanley, Barclays, Citi, some of the big bulge bracket banks, they helped set the guide price. But what we did from the London Stock Exchange perspective is actually we extended the opening auction to 3 hours. So we gave plenty of time for the market to find the price, and then the engine matched bid and ask. So there were bids, there were ask, and then we obviously allowed for 3 hours to collect that, and then the trading started. And when it started, the company was valued at $10 billion US dollars. Right. So I've got okay. So another company which is a bit smaller, and again, this is to just to demonstrate this, not just for big multi-billion companies that the market is designed for. Boku, which is listed on AIM, which is our junior market for growth companies, it actually operates in US as well as the UK. So it's it's a business that operates across both markets, and they were small, relatively small when they listed. So 165 million US dollars, and they raised 58 million dollars, which is again a fairly moderate amount. But as you can see, the performance has been great. There's been some volatility due to market conditions and things like that. But the most important thing is that today it's valued at over $660 million. And then maybe that's one of the reasons why before I go into that, that's one of the reasons why companies actually do choose to go public. So the benefits of going public are, you get the market valuation, and for a lot of private businesses, they are valued based on their assets, based on their revenues. But in the public market valuation, you're also adding the growth projection. Okay, how is the company going to grow? The confidence in the quality of the management, that also gives you sort of a premium for the public market valuations, but also the opportunity to grow in the aftermarket. And a lot of the businesses that we're seeing, grow exponentially on the markets. So Kaspi, which I mentioned before, they listed at $6.5 billion US dollars, and within a year they were $29 billion US dollars. So it's this type of valuation jump is not possible outside the public markets. So that's one reason. Second reason is the ability to retain, to use the shares, the public listed shares, to do business, to do M&As, and to retain talent. So when you have shares, you don't really have to pay cash for a lot of things. For example, when London Stock Exchange itself did this merger with Refinitiv, it was an all-share merger. So it's really, really important a tool in getting the big M&A deals done, but also actually because you're privately sort of publicly listed company, because you're transparent, the suppliers, the partners just are more willing to work with you because of the transparency and the confidence, level of confidence that it provides. And then in terms of talent retention, as you know, there are options and LTIPs and so on. So employees are rewarded not just with cash and salary, but also shares. And that's a massive part of the whole reward package, usually for companies. All the top CEOs get a combination of, as you know, of salary and shares as part of their remuneration package, and that's also allows the company not only to retain high quality talent, but also to ensure that this talent is invested in the company's future, because obviously the better the company's performance, the more money basically you get in the process. Another really good reason to go public is, of course, this international visibility and prestige and profile. So it's sort of intangible. So it's not necessarily just for deals, but actually in terms of positioning of the company, it's just prestigious to be a public listed company, especially if you're listed somewhere like the London Stock Exchange. So having said that, just moving to a slightly more boring part of the presentation, but I thought it might be useful to use this time to discuss this. So in the UK, we're currently undergoing the unprecedented set of reforms, with wide-ranging reforms in the financial services sector, but specifically in capital markets. And only a week and a half ago, the FCA, the regulator, has published the new and updated listing rules, which obviously we have been a big part of, and the whole market was consulted on. And this updated new rules are designed to support companies in the 21st century in a way that we weren't able before. And one of the things that has happened, for example, as part of these reforms, that the free float requirements, so the percentage that a company needs to provide to investors as part of their IPO, we reduced that from 25% to 10%. We are now allowing dual class shares on the main market, meaning that founders with sort of the so-called golden shares can also list. And there are also the whole range of other changes. Structurally, we used to have standard and premium. So now there is a single segment main market. So just main market without any breakdown into standards or premium. And on this slide, you can see the requirements. I won't go through all of them, but I think the important message here is that it is designed to ensure that London as a financial center, global financial center, stays very competitive. It is more aligned with some of the requirements that we're seeing in the US and in Europe, meaning that our big clients can also dual-list easily in London and on, for example, Euronext or in London or on Nasdaq and so on and so forth, which wasn't the case before because there was a big differential. So we're kind of we're maintaining investor protections, we're maintaining really good corporate governance standards, but we're also we have tweaked the rules to ensure that they are more they're more suitable for companies in, for example, technology sector and similar. So and I think the IPO process, and after that I will pause for questions. So, if you can think about the questions, feel free to pop them in the chat or, raise your hand. So the IPO process, it hasn't changed fundamentally because I think the only thing that has changed since the pandemic was that a lot of those meetings with investors that companies used to do face-to-face, they can now do via Zoom. And that saves a lot of time for the management because they used to go around the world. You have to be in the US, you have to be in Asia, obviously in Europe, Germany, London, and so on. So now you can do portion of those meetings remotely. But just to start with the beginning, I think the most important bit is preparation. So an IPO typically takes about up to 6 months, and a company would need to appoint investment banks. It needs to appoint lawyers, law firms, and usually it's if it's an international offering, it's 2. Usually, if it's a domestic offering, it could be 1 law firm doing that. And the 2 law firms could be, for example, one would be on the side of the banks and the other would be on the side of the investment banks that have been appointed, and the other would be on the side of the issuer. And all of these advisors will help define this business strategy and plan, help with the financial and disclosure, structure the deal in the right way. And the offer structure usually, when you think about what is going to be, how is my IPO going to be structured? It's usually, how much money am I going to raise? What will be the breakdown between primary and secondary? So raising new money vis-a-vis, shareholder sell down. The timing, obviously, super important. Listing venue is very important. The type of investors who will be targeted, and that's again, investment banks will be able to decide on that. And one of the most important things is early look meetings. So it's very important to meet investors way before the IPO, the actual IPO roadshow, because you only get up to an hour with investors, and they will need to make a decision of whether to invest tens of millions. So they need to know, they need to be really well briefed about the company and ideally it shouldn't be the first time they see the management. So it needs to be a second or third actually time. And they're actually happy to see the companies early. In terms of preparation, due diligence obviously will be done. So investment banks will do due diligence, law firms will do due diligence, hugely important. And all of the information about the company goes into the prospectus. It's the IPO prospectus is a big document around 300 pages, which tells investors everything about the company. And most importantly, it also includes the risk factors. So the chapter on risk factors is one that investors read really carefully. And it could be, for example, country level risk factors, political and so on. It could be sector or industry risk factors, and obviously companies risk factors, for example, any legal issues and any any risk with related to suppliers. Basically anything risk related goes into that in the chapter. But also 2 and 3 months before the offering, before the IPO, a company also sets a target valuation. So it's going to be a range, a price range, and typically you have the lower end and the upper end. In practice, what I'm seeing is that companies can list even towards the lower end of the valuation range and perform really well in the aftermarket. And I've seen situations where companies are valued at the upper range and then they drop in the aftermarket. The share price drops and it's really hard for them to recover. So there are all sorts of situations. Raspberry Pi, this IPO from last year, which you saw, actually was valued at the upper end. So it was valued at the top end of the range, but also it also jumped in the aftermarket. So it's quite interesting. And then investor education management roadshow. This is the sort of the most intense, the sort of exciting part. This is where the company publishes this information that it will list. We call it intention to float, ITF. So everyone knows that the company is listing. The management are on the road. Their founders, the CEOs, they are speaking to investors almost non-stop for a couple of weeks. Lots of work goes in the back, happens in the background. There will be research investors that will also unconnected research, meaning that investors that are not related, analysts that are not related to investment banks, mandate investment banks actually do their research as well. And then hopefully pricing happens. And then after that, the investment bank opens the books, so pricing happens, they start getting the orders in, fill the book, close it, and then start admission to trading. So the way it works in London is that the admission process is parallel. So it's the admission to listing or admitting to the official list is the FCA process, it's the regulator, and the admission to trading is run by the London Stock Exchange, and we obviously talk to each other. So we also work in the background, and FCA needs to approve the prospectus from the regulatory perspective, and the London Stock Exchange needs to approve it from the admission to trading perspective. In the aftermarket, it's really important that okay, I'm running out of battery actually, so I'm just going to pause here and see if there are any questions. And if I drop, please wait for me for a couple of minutes. I'll just find the charger and I'll plug in my my laptop.
Can I ask maybe the moderator to voice any questions and I can answer them?
Yeah, sure. So first question is, could you please provide some details on the difference between IPO process and RTO process on LSEG admission?
On where, sorry?
On LSEG admission.
On the London Stock Exchange. So the difference between the IPO on the London Stock Exchange and where?
RTO process.
RTL? What is that?
Yeah.
What is RTL?
So I'll ask the person who has asked the questions for the details. So next question is, do companies need to be incorporated in the UK to list on the LSE?
No, that's not the requirement. So there are different instruments that allow non-UK companies to list. One of the most well-known and widespread ones is the GDR, the Global Depository Receipt. So this is an instrument that non-UK companies use to list in London. For example, Air Astana, Kaspi, and a lot of other companies from not just from Kazakhstan but from around the world can use it. So you can retain your, for example, Mongolian incorporation, and then you can list those GDRs in London, and you can have Mongolian shares listed on the Mongolian Stock Exchange.
Yeah. So just play around with it.
Okay. So the previous questions, RTO is a reverse takeover. So
Okay.
the question is difference between IPO and reverse takeover process on the London Stock Exchange admission.
Yeah. Okay. So yes. So the RTO is you can also raise capital. So it could be an IPO as well. Well, meaning that you will raise capital as part of the process. So what a reverse takeover means is that you have already an existing listed company on our market, and you merge with them, or you buy them, and you basically relist a new entity on our market. So that's just the technicality. In terms of the process, obviously when it's an IPO of a new company, it is not known to investors, so you need to put quite a lot of work into disclosing information, speaking to investors, getting the valuation. With an RTO, it could be, if you're not raising any capital, it could be pretty straightforward. So basically just an announcement to the market and a fair amount of education, but it's not as as such an onerous process as with a new company listing. But if you are raising money, then they obviously, and that is as part of this RTO process, that is quite important. So basically, the roadshow, the marketing roadshow needs to happen if you want to raise any capital. So on the capital raising proportion part of this, they're very similar, but on the listing part, where if you're not raising any capital, so it's a bit more straightforward to do a reverse takeover.
Okay, thank you. The next question is, could you give us details on the listing process of AIM or alternative investment markets?
Sure. And thank you for the question. So yes, the alternative investment market is our junior market and was devised specifically for earlier stage growth companies to come onto the market without the usually onerous, without having to meet the usually onerous listing requirements that we ask for companies on the main market. But the key difference is that there is no minimum market cap. There is no minimum market cap requirement. So a company just needs to prove that it has working capital, enough working capital to operate for 12 months. There is also no technical minimum free float requirement. So it can list with less than 10%, for example, free float. But usually we do ask to take into account the size of the business. For example, if you are 5 million, 10 million company, and you are only offering 10% in the business, it really severely restricts the number of investors that can come into this sort of micro cap at this micro cap level. So if it's a 50 or 100 million or 20 million company, and it's offering say 30 or 50% free float, then it's much easier to broaden this investor range. Another unique feature of AIM is that it is regulated by the London Stock Exchange itself, not by the FCA. So we have AIM Regulation Committee, which makes a decision and reads the document. Instead of the prospectus, the IPO prospectus, you provide a shorter and simpler document, which is called AIM Admission Document. And the way we ensure that investors are also protected in this scenario is that we license special firms, investment banks and corporate finance firms called nomads, nominated advisors. So they have a license from AIM to bring companies onto the market under the condition that they stay with the company as an appointed advisor throughout its time on the market. So they don't leave the company after the IPO. They also help the company disclose financial information on an ongoing basis after the company. And I'm very happy to add a few slides to my presentation and send it to CMM to circulate to those who are interested.
So we have still a few more questions left. Next question is for pre-IPO preparation. Promoting the company to investors, analysts, and media is crucial for frontier market companies. So for Mongolian companies, how they should work on the pre-IPO?
Sorry, say it again. So what work does the Mongolian company need to do before the IPO? Is that the question?
Yeah. How should Mongolian companies work on the pre-IPO? It's like a broad question. Like, what is the right steps towards working on the pre-IPO?
How many Mongolian companies are already working on pre-IPO?
No. Just in general step. How should Mongolian companies
not Mongolian,
work on
just general.
Yeah, just in general.
In general, okay.
Yeah.
On the advisory side, all companies who are preparing this.
Yeah, companies are preparing pre-IPO preparations.
Yeah. So in terms of the pipeline, in my region, we have quite a big pipeline. So we would have several dozen companies, which we will be theoretically looking to list, and some of them will be at different stages of readiness. So I have a pipeline for this year. So I have a few active companies that are wanting to list this year. We have a pipeline for next year. They're slightly far away. And I'm working very closely with them on helping them prepare and helping them get connected to the right advisors and investors. And then we've got companies that are preparing to list in the longer term. So it's 2-3 years from now. And usually we engage with companies quite early. So even if you're 3 years away from IPO and you're thinking or interested in it, feel free to reach out to me, and I'm very happy to sort of have a more customized conversation around that. But yeah, I mean, and that's just a region, my region, sort of Europe and CIS, and obviously we have a big international team, and they're working with companies from all over the world, on those who are preparing to list in London.
Okay. Well, we'll move forward again.
So next question is, what are some common challenges and pitfalls that new issuers encountered when seeking listing on the London Stock Exchange?
I think there are technical and non-technical issues. So the technical issues are obviously just getting the company ready. So getting audited financial statements, making sure the board structure is right. So there are independent directors on the board. Also educating managers on how to behave themselves in terms of how to lead conversations with investors. And there are companies who actually help with that sort of IPO readiness work. The non-technical issues that come up is just this idea of changing the mindset. So, for example, if it's a family-owned business, so it can be quite challenging to move from the notion of being a private company, not having to disclose any information, to suddenly becoming a transparent business that has to disclose on time both good news but also bad news as well. So I think that is a kind of a learning curve through which a company needs to go through. Some companies are naturally ready for this type of work. Some companies take a little more time. As I mentioned, I've worked on a number of privatizations, and there's a lot of work, for example, for state-owned companies who have, say, government officials on the board to kind of transition into a new mode of operation, a new mode of engagement with the outside world. Look, the good news is that there are firms and consultants and advisors who really help with all of that. There are financial communications advisors, PR advisors who help with that, and also firms like PwC or Deloitte who have IPO readiness programs who can also help with preparation.
So the last question is there an opportunity to raise capital for Mongolian exploration projects on the London Stock Exchange?
Oh, yes, yes, absolutely. It depends. There are a lot of details, nuances there. So it depends on what you're exploring for. If it's a gold exploration, it's going to be different to, say, coal exploration. So we have had instances of companies at exploration stage raising capital on AIM. But I think in this environment, market environment, the later stage you are, the better. So if it's just an idea, you just bought the license, obviously it's going to be very hard to go public with that. But obviously if it's already a well-developed project with a good progression and obviously the good growth strategy at the end of it, after you start production, then it's a different story. But I'm very happy again to have that conversation on a one-on-one basis if you want to. So my email address is on the first page of the presentation, so you can email me if you're interested.
Thank you. We received one last question, and let's close the webinar with this question. Okay, the last question is, what are some successful cases of frontier market companies doing an IPO on London Stock Exchange?
So the connection is very good. Unsuccessful or successful?
Yeah, successful cases of frontier market companies doing an IPO.
Of frontier market companies, yeah. No, obviously I've already spoken about Kazakhstan in quite a lot of detail. So this is sort of frontier/emerging market. We do have Petromasat from Mongolia, which is listed on our market. One really interesting frontier market that's really attracting lots of attention from investors is Uzbekistan. So Uzbekistan is proper frontier. They did. I've worked very closely with the government. They did their inaugural sovereign bond on the London Stock Exchange 3 years ago, and after that they also five commercial banks, corporate banks, followed and did their Eurobonds in London. And basically this story has started developing really quickly. So most recently, the government listed several tranches, raising over $1.5 billion overall US dollars equivalent in both euro, dollars, and local currency through the London Stock Exchange. So there's so much interest. It's always useful when a frontier market government makes the first step and lists its sovereign Eurobond, because it helps set the benchmark, and then it allows private companies to follow. And now Uzbekistan has an IPO privatization program. So we're working very closely with some of its largest companies to discuss, international privatization via the London Stock Exchange, with obviously local shares being listed locally in Tashkent. So this is, I think, a very good example of one frontier market really doing really well and being very successful with international investors.
So maybe, yeah. So that was
Receiving our invitation to speak on today's webinar. We're looking forward to see here in Mongolia with the potentially a lot of companies issuing on the wellness exchange and cooperating in the future. Thank you, and good luck in all your endeavors.
Yeah.
Thank you for all the participants.
Thank you very much. Thank you very much for inviting me, and thank you for the great questions to the audience. And sorry for the technical issues that I've had, but you know, it's probably part of life when you're trying to do something virtually. But I will be in Mongolia in second week of August, and looking forward to meet as many of you as I can. Thank you.
Hey, thank you. Goodbye. Thank you for everyone for
Bye-bye.
participating.